Everyone's crowded into the same names. Costco reports next week. What are they going to say to justify 50 times earnings? I don't know. I'd rather own Target. I'm long both, but in terms of what I'm speculatively long, I'm much more apt to lean towards the Targets of the world. I think you have to pay attention when Lulu starts not doing stupid things. At $500, they had to continue to reinvent tights for women every quarter. At at $120 or $130, they pretty much just have to stop shooting themselves in the foot every quarter, and that'll be good enough for a while. And so when you can kind of identify what stores have to do, Abercrombie had to stop the bleeding in terms of their comps. They did an okay job with that, and they had good logic for why they didn't. China continues to be pretty strong, and America's sort of cromulent. It's fine. The consumer's not crashing, and they were priced for the consumer to crash. Every rally in retail's been sold like crazy all year, and it's they're just not that much worse as an industry than the rest of the gang you can buy out there.
Yeah, I mean, Walmart finally stopped going up. Like the thing was just an absolute beast. Like until I guess the last week. Were their earnings last Wednesday? Last Thursday? When was it?
Yeah, I think it was last Thursday, and they were
Yeah,
and they
yeah,
were perfectly fine. They were perfectly
yeah.
acceptable, and it's one of those things where they wrote the headlines after they saw the stock, and they said, oh, they were cautious. Now, if you're a mass merchant discounter in a world where gas has been going up and is what 50%, 20%, however percent higher at the pump than it was. If you're Walmart, of course you're going to be cautious, and of course you're going to, talk your own book a little bit and say, yeah, the consumer is cautious. They're looking for a good deal, which is why more of them are coming to Walmart. That was the entire kind of phrasing and spirit of what they were saying. At the same time, they're really good at allocating their capital. It's the same argument as you get at Amazon. If they were chucking a bunch of capex at stuff that didn't work, that would be a problem. The fact that Walmart is actually leveraging their stores to do a ton of deliveries in like 2 hours. So, it's you can buy groceries faster than you get a pizza delivered. That's pretty damn impressive. That's pretty smart levering. And they're getting membership dollars from that, which is huge margin. You're talking about it like a 4%, 5% tops, kind of like discount is not a big margin business. So if you're going to a system where you're selling memberships and you're selling ads and you're making money online, that's a big deal. They're $150 billion run rate online right now. Walmart is. That's they're now number two to Amazon, and in third place is Who Gives a Shit. Like they're that far ahead of sort of everybody else,
You
and
know what?
growing it
Those
fast.
two. Look, I do some grocery shopping on Amazon, and it's fantastic. If they're anything close to that, I haven't used it. Like it's great. I mean, in it, you are right though. Like, I mean, Target is a far like distance from those two guys, and when it comes to some of the stuff, they are real time, same day discount price. It's impressive.
And
All
so
right,
and the way Target counters is they make better stores. It's and they got away from that for a long time. They got political, they got confused over what their mission is. A clean, nice place to shop. The moms are back at Target. You go there and you see moms with their family and they feel safe and they buy their groceries and oh, here's a cute blouse. You'll never guess how much it cost. Only $30. What a deal. That's the entire business model. So to the extent that shopping in stores is going to be a thing, they'll get more than their share out of the discount world. And speaking of capital allocation, I don't want Target dedicating just tons of money. They're going to spend 5 billion this year on capex. I don't want that to go to e-commerce. It's we'll figure that out when we get there. We can fix our stores right now. Walmart has better boxes for what they're trying to do. Target had kind of a lot of stuff that they can improve because it for them it flows from traffic right away. They're not selling memberships. They're not doing any of that. But that's reflected in the multiples. If they were all at 50 times earnings, then you'd have obviously, a short would stand out like a sore thumb. But Target's got a pretty good discount to those guys who, it's if you compare them to Costco with their membership plan, Walmart with now kind of different spokes that they're finally putting on this system, it's there's a pretty good discount built in there, and that's sort of what the multiples should look like. Of the three or the four companies that we mentioned, I think Target's the one with the best chance to go higher.
Hi, I'm David Maris. If you like what you just heard, we've tracked every single pick we make on the show, every ticker, every thesis, every entry price, over 1,100 picks and counting. We put it together in a free report with our top 10 performers, the reasoning behind each one, and a preview of our full dashboard. If you want access, the link is in the description.